The banks just declared war on your crypto earnings. And right now, there is a battle happening in Washington that could change how much money you make from stablecoins forever. But don't worry, your bro Charlie is here to make you understand. So here is the situation as of today, April 10, 2026. The White House released an official report on April 8th saying that banning stablecoin yield would hurt regular people, not help banks. Their economists found that if Congress bans stablecoin rewards, everyday users lose around $800 million every single year. And what do banks gain from that ban? A tiny 0.02% boost to their total lending. That is basically nothing. The White House is saying this loud and clear. The math does not support the banks on this one. Now let me break this down simply. Stablecoin yield means you earn rewards just for holding or using stablecoins on crypto platforms. Think of it like interest on a savings account, but better. Banks hate this because they are terrified people will move money out of bank accounts and into crypto to earn more. Standard Chartered analysts actually calculated that stablecoins could pull around $500 billion away from traditional banks by the year 2028. That is why banks are fighting so hard. This is not just a policy debate for them. This is a fight for their own survival. Now, the Clarity Act is the big crypto bill that already passed the House last year with massive bipartisan support. But it got stuck in the Senate specifically because of this stablecoin yield argument. Banks lobbied so hard that the current draft of the bill actually bans passive yield completely. When that draft leaked, Circle dropped 20% in a single day. $5.6 billion wiped out in one session. That tells you everything about the stakes here. Treasury Secretary Scott Bessent wrote a major piece in the Wall Street Journal this week urging Congress to pass the Clarity Act right now. He warned that Senate time is running out and that if the bill does not move before the November midterm elections, it gets pushed back for years. President Trump also called out the banks directly, saying they are holding the bill hostage to protect their own profits. Coinbase top lawyer went on Fox Business and said a deal on stablecoin yield is very close. And the Senate returns from its Easter break on April 13th for the next major markup session. That meeting is everything right now. Here is what this means for you. If banks win completely and all stablecoin yield gets banned, you lose a real source of returns. Platforms lose their competitive edge over banks. And the United States risks falling behind other countries in the crypto race. But if crypto wins and yield stays in the bill, we are looking at a completely new financial era where your stablecoins actually work for you. April 13th is the date to watch. The Clarity Act markup session could change the direction of this entire fight. Stay locked in, stay informed, and as always, your brother Charlie has got you covered.